Hey, good morning, everybody. Happy Monday to you. Starting off another trading week here. We got lots to go over today. We're going to start with going over last week's trade, which was Carvana. I cover a couple of headlines as we start the new trading week, do a quick U.S. market update, and then we're going to look ahead and see what's coming up on our radar and specifically a stock to watch this week, all coming up right now. So let's get right to it. The stock we did last week and we kept our eye on was Carvana. Carvana came through for us with big earnings announcement, and you're looking at a risk graph or a chart and of our strangle that we did, and this is as of Friday. All right. So the trade, that little strangle that we did and we talked about, cost us about $1,400, and we doubled our money on this trade. In fact, we doubled it on the earnings of, announcement. This waited one day to get out of it. Getting out on Friday, you can see a profit of over $2,000. That was 149% return on risk. So that's 2 weeks in a row of triple digit wins. This is what can happen during earnings season when you play these volatile stocks. All right, we're going to talk about this a little bit more as we get into the show. But let's jump over and talk about the headlines and begin our trading week this week. We have Friday we had jobs, all about jobs, and the jobs report came out. And the thing, I don't really like putting these in my headlines is they always get revised, but we came in at 175,000. That's pretty low, and that was much weaker than expected, and markets are kind of looking at that with a raised eyebrow. The next bullet point, we're keeping an eye on oil prices as we start this week, as some increased tensions in the Middle East, specifically between Israel and the Palestine or Palestinians, and those tensions are increasing. And Saudi Aramco feels that they need to start raising prices. So we'll keep an eye on oil. It has been retracing there. Moving on, New York Fed came out and started talking about, well, a point that we've all been seeing for quite a while. I'm not sure why it took them this long to report this. Renters' hopes of buying new homes falls to record low, and I guess that's kind of a national thing. But I've been hearing it from my kids and from others, relatives that are haven't, they're young, they've graduated from college, they're looking to buy a new home, and they're stuck in the rent race. Okay. And just cannot afford new homes. And we saw, man, over almost a year ago, data that came out showing that the average age of a new home buyer had increased to 38, or maybe yeah, I believe it was 38, and that was never seen before. An incredibly high number for a new home buyer, because it was in the low 20s years ago, and has slowly kept increasing as inflation and variety of factors keep playing into the challenge there. All right, and lastly, we'll touch on earnings. Earnings this week, we are still in full stride. We have over 1,800 companies declaring earnings this week, and this makes for a lot of fun, a lot of action, and this will affect the market. So let's see what the markets are doing. Let's jump over and start looking at the charts. We're going to start with the Spider Index Trust, SPY. We have broken out of a little wedge pattern that we were forming. Let me toss on a couple moving averages. Now, the short-term moving average, which is this reddish pink line, kind of blends in with that top part of that wedge there, and we have clearly broken through that. So Friday we popped above it. Today we're following through as the S&P is up about 74 basis points on today. That is getting within striking distance. Um, um, and we could definitely get to some new highs here relatively soon, and that would lead us to, well, like I said, all-time highs, and we will see if we can get up there as we race higher. And the markets have decided, yes, we're going to move higher. As we went into that wedge, nobody knew this was an area of chop for about 2 weeks. We finally have broken through. Market is showing its colors, and now the bulls are in control, and up we go. Moving on to the Qs, it's the same story there. Very similar chart. All right. We have broken above that short-term moving average with some force. Okay, this is no light attempt that fails and attempts and fails. This is a pop above, and now we're getting our trigger day to go long. Okay, trigger day to go long, and we'll see if we can't break above this thick area of resistance. We're entering that right now on the Qs. This area of what we call acceptance, when the market moves higher and then starts to channel. Some people call that resistance, but when you're at new highs, that is also an area of acceptance, and it takes a while to form that base, for lack of a better word, that area of, okay, we accept this price, and now we're trying it again and look to move higher beyond that. And the Qs are up 75 basis points as well, matching the S&P 500. Let's jump over and look at small caps. Boy, they're breaking out as well. The thing about small caps is they are interest rate sensitive, and really that comes into play when you believe there's going to be a recession. And right now, the markets are doing what we call there's an old saying in the markets that the markets climb a wall of worry. Okay, so there's all these things, like I touched on some of those headlines: oil prices possibly increasing, there's inflation out there, interest rates are higher. We'll be talking about that in a minute. Okay, but this is a catalyst for the markets to continue moving higher. Markets climb a wall of worry. All right, so if we jump over then and look at crude oil, okay, it is up slightly on that news. Wow, look at that. It's actually off its highs. All right, so we are at some support here. We have retraced 50% of this move from this pivot point back down here at right down here, that pivot point right there, we have moved higher and we have retraced 50% of that. So we're at an area of Fibonacci support. So it'll be interesting to see if we hold this 75.50, 75.30 level for any in extended period of time. We do have our long-term moving average hanging out down here. Now, this is the 161 period moving average, the 150. We're probably holding at that right now at the 150. So interesting place for crude oil. There is some pressure on crude prices to continue to drop. However, with any type of crisis in the Middle East, we could see crude spiking. All right. All right. So we're going to talk about gold here for a moment. We've retraced about 50% of this move. As you can see here, I've got my Fibonacci retracements on. We're hanging out right at 215.22. That's up 1% on the day. Now we're still in a downtrend. We are trading below the short-term moving average. Could we see that the retracement in the metals is over? I don't, you can't tell with a one-day move, but it is interesting that we're getting this rally at this point, and we are up at an area of resistance for gold. Now, silver is the one that is really moving. It has popped higher aggressively. Okay, it is up over almost 3.5%, a big move for silver. But the same thing here is it's trading below that short-term moving average. We came right down to the 61% retracement area, and then just look at that launch right off of it. I would like to see us regain that short-term moving average, and then we could be challenging the previous highs back here. Let's move over to bonds. Let's start with TLT, and that is the long end of the curve. That's the iShares 20-year Treasury bond ETF. We are trading higher today a little bit on TLT. This means interest rates dropping. The 10-year, I believe, is hovering right at 4.5%. That is off some recent highs for the 10-year, which is good news. Now, there is good news and bad news that is going to be built in here, and I'll show you what that is in a moment. But for as far as bonds go, the long end of the curve, we're up slightly. Now, the short end of the curve, take a look at this. We really catapulted up in the last 3 days. Today, not much movement. We're flat. But since last week, we dropped hard midweek last week, and then boy, we have rocketed higher, dropping rates, bringing them down. And this is interesting, as we're going to see here in a moment on our inverted yield curve, how this has affected the rates, the long end versus the short end. Okay, so SHY is the short end of the curve. This is the 1 to 3 year Treasury bond ETF compared to TLT, which is 20-year plus. All right. So let's take a look at that inverted yield curve, because it's doing exactly what I said. Excuse my crude drawings here. All right. I can't draw a straight line with a mouse to save my life, but that's okay. That's, you know, this is just to highlight a general concept. Back in 2023, had this trend line here, and then all of a sudden we increased the flattening of the curve, and that that can't be sustained when you start that sharp move like this. And of course, this time, same thing. We have this nice, almost 45-degree angle here, and then all of a sudden it starts to increase. It rapidly increases. And look at this. We drop right below, as crude as my trend line is here, we drop below it. We're now at 95 basis points. That's almost a full 1% divergence again. Now, I don't know if we'll go down and test these lows that we previously had, but it's just interesting that we're all of a sudden dropping and we're starting to widen again. As much as the powers that be have tried to flatten this curve, it's just not happening right now, and not yet. So this has always been a precursor to a recession. We still have this inverted yield curve. It favors short-term interest rates. You're getting a nice premium for investing on the short term, and that's just not how things work. Okay, you're supposed to get better premium for holding your money longer. That means 10 years, 20 years, etc. And here it's nothing but the short-term paper that is trading at a higher rate. So we'll keep an eye on these, as we do in every week. Now, with this, interest rates coming down, this has affected mortgages a little bit. If we pull up the 30-year mortgage, we are off that high there that was holding at 7.5%. We're down about 7.28%. Okay, 7.28%. That's a national average. All right, and that is easing the interest rates as it relates to home buying and the 30-year mortgages. Now, one thing to remember here, the blue line is a daily rate. That is a daily change, while the gold and the silver or gray are weekly. Okay, they change only weekly. So we got those updates on Friday. You can see that the trend is still up on those, and that now short-term rates are dropping. But we'll see how this plays out as we move forward. Okay, so after talking about interest rates, then let's get back to markets and about trading. We have a ton of earnings coming out this week. In fact, more than we can really count. And this gets awfully busy, so I'm not going to list all the stocks here. But when I show this image each week, it's highlighting the big names or the notable stocks, and then unusual option volume. Okay, and so you'll often see the Walt Disneys and the just the big names, Uber and AMC Theaters and Robinhood, Groupon, et cetera, and so on. You're going to get all these names that you're familiar with, and some that you're not. Okay, and it's the ones that you're not so familiar with that get to be interesting. Okay, so just realize that every day we have stocks that are declaring earnings. Could be potential market movers for some of these. We have everything from banks to consumers to energy, and everything in between. Technology. They're all declaring a variety of, and so far so good. Markets are reacting positively to some of the earnings coming out. We just had Carvana with the big gap higher and a nice profit on that. So what are we looking for this week? Well, believe it or not, we're going to go to a name that's not on this list. This is a stock that came up on my radar the last earnings cycle, because this company was actually pretty quiet. until they mentioned the words AI. And boy, when they did that on their earnings call, this stock took off. As you can see on the chart there on the left, back in February, this stock gapped higher and then traded higher. And then all of a sudden, a lot of volatility, a lot of bouncing around. And then we had, as we move forward into this year, through the end of March and into April, we had this sharp sell-off, coming down about $25. And then we consolidated. Today, we're making a little bit of move, but we do have earnings coming up in 2 days. Okay, this will be, I believe, Wednesday after market close. This stock is ARM Holdings. Okay, ARM Holdings. The symbol for ARM Holdings is ARM. All right, and um, easy to remember. And what we're doing is a straddle. Okay, so the image that you're seeing on the right is the option model of what a straddle is. It's the same strike price for a call. Strike price. You buy a call and you buy a put. Same strike price, same expiration date. Okay, and we're doing a straddle this time. We did a strangle the past couple of weeks on PayPal 2 weeks ago, Carvana last week. We did these little strangles. This time we're doing a straddle, and this should set you back around $1,400, $1,500 for this straddle. But remember, as long as the stock moves, you can make money in either direction, and that's the key. All right, that is the key. Now, so we're looking for this stock to make a big move. Now, this strategy is one that both straddles and strangles are something that people have struggled with when they first learned how to trade options. This was a great theory of, oh, make money in either direction, buy a strangle or buy a straddle. Well, the problem is people didn't have much success because they were picking the wrong stocks. They were picking stocks that just didn't move through earnings or didn't move at all. Okay, and oftentimes they would end up with a loss. And well, how we do it is very different. And I have a free guide that will show you exactly how we will do it. It is available for download at ewotrader.com/straddle is our free guide for you to read about how we trade these strategies through and around earnings. As you can see, we've had some great success with it. We'll continue to look for these stocks that typically make big moves around earnings. So that's it for this week. Happy trading to you all. We'll come to you again and see how we did with ARM next week back at the same time. Everyone have a great week. We'll talk to you again soon. Take care.